Hey guys, welcome to my channel, The Dumb Stock Market Guy. So, in this video, we'll talk about how to pick good stocks without going into too much technical things. So, people talk about PE ratio, people talk about what is PAT, what is EBITDA, but let's forget it. Let's forget these kind of things that exist. And you are just really, you don't know anything. So, well, obviously, we'll talk about these kind of things in our future videos. But what about you are just like I am or I used to be? So, for those kind of people, so you don't need to turn into a finance nerd. So, step one, understand the business. If you can't explain what the company does in one sentence, then you should not invest it. See, keep one thing in mind. I'm making this video for people who don't know about anything technical things, and they just want extremely basic thing so they can buy their first stock. So if you cannot explain the business in one sentence, like Apple, like McDonald's, KFC, Netflix, these are the things you can explain in one line. Some random AI or blockchain, which might sound cool, but if you don't know, so nah, confusion. So if you understand the business, we can go to second step. Step 2, look at long term growth. Go to Google Finance or Yahoo Finance. See the 5-year chart and then analyze, is it growing consistently? Little bit ups and downs are fine, but is it growing consistently, or is it a messy roller coaster? So you need to find which is growing consistently, not which is just going like a roller coaster. Step 3, profits. Now mind here, you don't need to be an accountant. You just need to say that see that are they making profit? Is revenue growing? Is debt exploding? And mind it, this info is free on Google Finance. If profit is down, debt is up. Run, my friend, you found a red flag. Well, it's red flags are not always in people. Sometimes stocks are also red flagged. Step 4, does it have moat or brand power? So, would the world care if it vanished? Like Google, if it vanished tomorrow, there would be havoc. Coca Cola, Apple, if it's just another EV startup or another dating app, mm, they are replaceable trash. Step 5, ignore short term voices. See, there are problems worldwide, wars, institutions taking out money, investing money. So, ups and downs would be there. But it doesn't mean that you should be stressed about it. Just zoom out. Just try to zoom out. And in psychology, also, it is said one should zoom out. Now, here's your dumb but deadly checklist. Understand the business, 5-year growth. Are they making any profits? Low debt, moat, or strong brand, and not just hype today. There are some stocks which would be hyped for a few months and then they'll turn into fairy dust, non existent. So, you don't need a finance degree, you need some common sense and this checklist. Mind it, this is for beginners only. Who are too advanced, our other series are coming soon. So, subscribe if you want to see these types of video again. See ya.